Hey, it's Ryan Gillard here at Real Broker, your Calgary Realtor. If you're a buyer in Calgary right now, it's a bit of a tough go. We've got record low inventory levels, high interest rates, and the prices seem to be going through the roof. And when I'm talking with buyers out there showing properties, many of them are legit concerned that if they don't buy now, they might be priced out of the market completely. And the home they want, it might be way more expensive in a year from now. So it's a bit of a tough go, and that's why I'm making this video about the zero down mortgage, because it might be an option to get into the market for many people. And so this program is also called the flex down mortgage or the borrowed down mortgage. And I'll just briefly go through it in this video. And just a bit of a disclaimer before we start, I am not a mortgage broker, I'm a real estate agent, but I do work with a mortgage broker that has a lot of experience with these programs. And what you need, because if you walk into the bank asking for the zero down mortgage, they will look at you like you're an alien and they'll have no idea what you're talking about. So it's best, if you have any questions at all, give me a call and I can refer you to my mortgage specialist as well if you have further questions. All right, let's get into it.
I've got this PDF that goes over the zero down program, and it is fairly simple. And actually, I'm going to start over here with the eligible sources of equity. And it makes more sense this way, I think. So I'm calling it the zero down mortgage, but the down payment has to come from somewhere. It's more like 100% financing. And what we're doing here is we're borrowing from any source that is arm's length to the purchase or sale transaction. This may include personal loans, lines of credit, or lender credit, and loan payments must be included in the total debt service calculation. So the deals that I've done, the down payment has come from a line of credit. So my mortgage broker gets you approved for the mortgage and the line of credit, which is used as the down payment. Now I'll go back to the top here. So transaction types, this is just your typical transactions in Calgary. So townhouses, condos, single family homes, duplexes. Maximum 25-year amortization term. Now the credit score requirements, this is the big one here, is you have to have good credit for this program to work. And you typically have to have, you have to have a credit score over 650 and no bad things on your bureau, like no bankruptcies or missed payments. It has to be a clean credit score over 650, nothing bad on the bureau. Otherwise, this program will not work. And loan to value criteria. So for this one, again, we're using the line of credit as the down payment. The minimum is 5% down. And now the way this works in Canada is properties under 500,000, the minimum is 5% down, and then between 500,000 to 1 million, it's 10% on anything over 500,000 up to 1 million is 10% down. So it's a bit confusing, but that's how that works. Interest rate types: fixed, standard variable, capped variable, adjustable rate. People always ask me, is the rate higher with the zero down mortgage? It's the same rates you can get with a regular mortgage, so it's no difference on that front. And for property types, the maximum property value must be less than $1 million, maximum of 2 units with 1 unit owner occupied, and it can be for resale or for new construction. And ineligible sources of equity, again, the source has to be arm's length to the transaction, so no builder incentives, realtor, mortgage broker incentives, or loans to the borrower that impact the property selling price. Again, the easiest way for these deals to come together is from a line of credit, I find. And borrower qualifications: when the down payment is borrowed, payments must be included in the total debt service. No third-party or non-occupying guarantors. Standard writing guidelines apply. And the maximum debt service ratios. This is very technical. This is mortgage broker stuff. So if you have very specific questions about this, again, give me a call or shoot me a text and I can refer you to my mortgage broker. But in a nutshell, a very easy way to describe this: it's just 100% financing. We're using a line of credit as the down payment, and you have to have good credit for this program to work. And if you have all that stuff, it can be a great way to get into the market. And you can also use this to top up an existing down payment. So if you have some money down, you could actually use this to add to it as well, which might be helpful for some people.
So that's how the zero down mortgage works. It's fairly straightforward. And if you think it might be an option for you, give me a call, shoot me a text, send me an email. I'd love to help you out and see if we can put a transaction together. Thanks for watching, and I'll see you in the next episode.